Alrighty, so welcome to the first day of the challenge. It's not even a challenge, I just made up a random name for it. But the first day of actual trading. So today, I'm going to walk you through two trades that I took. And right off the bat, it actually ended up being a red day. Nothing too huge, nothing significant to the account. But I do want to walk you all through my process of how that happened, what I did, why I traded it, how I traded it, the size that I used, how much I lost, and what I'm looking into doing tomorrow if a trade presents itself, which, let's see. So first off, I ended up trading two stocks. Right here you can see the day. So a trade on SMCI and a trade on SPPL. Both ended up being losses. Again, nothing too significant. A total of almost $160. And let's get into how that ended up happening. So if you saw the video yesterday, I was explaining on how I was looking into trading this microchip company that has just been dropping in price over the past week. And I'm looking to trade that reversal bounce, which today, when I started basing here off of the price that it had hit in pre-market, I started sizing into it. I had 120 shares with a $21.09, and I was risking about 50 cents. That was a starter size. I didn't want to risk too much because this thing could just keep going down. I don't trust it again. So I took that size, and honestly that was probably going to be the most size I was going to take with it, unless I saw it do something very convincing. And it was just being very choppy in the morning. It actually ended up stopping me out, where I got out of the trade right here. Again, with SMCI, it was like a $60 loss, a $68 loss. So again, small size. My plan right here is, if I catch this, to ride this up back into the high 20s and even low 30s. So I thought the risk was pretty solid for the reward that I'm looking for. And as you can see right here, it ended up holding those low 20s and closed in the high 22s. So I was in the right place, just didn't give it enough wiggle room for it to work out. Which is fine. A lot of times when we try to do that, we find ourselves in the situation where we're supposedly giving it wiggle room, and it just keeps going more. It keeps dropping more than we anticipated, and our risk just gets enlarged, and then next thing you know, you're losing a whole lot more money than you had initially thought. So these types of play doesn't bother me anymore. I mean, yeah, it did have a little bounce. But now I'm more interested in seeing what it does tomorrow. SMCI at this point, it's not proving to have a nice range in it, meaning that the bounces have been pretty mediocre. The tries that it has had to bounce, or the times that it has tried to bounce. So we'll see. I'm playing it kind of just by ear, filling it out every day. I don't want to take too many scratches because, if you're taking $60, $70, $100 losses on this every day, in 4 or 5 days, you already got a big chunk of your account. Remember that I'm trading a $5,000 account, so I also want to be careful with my sizing. Those 120 shares that I had were $2,000 of my account. So that was already killing half of my buying power, or had taken half of my buying power for that position. But again, the plan is to catch a nice move on this if it has some juice to run up, because the company seems to actually legit be struggling, and every day it has just more and more bad news. But that again, that is the trade that I had on SMCI. The second trade that I had, which was the $90 loss on SPPL, was this play right here. And so the type of play that the pattern that I'm playing right here is what I call a third day surge. So meaning that this thing spikes, significantly the first day that it comes up on people's radar. It holds the second day, and then on the third day, it continues to run either to the highs that it did on the first day or breaks out of that. This one being that it was kind of funky, the price movement on the second day, it wasn't like a steady hold, where it was just consolidating at a certain level. This thing like dropped pretty hard and then bounced pretty hard, and then this day it's consolidating. I'm still looking at it. So to explain the trade that I had, actually started getting into this. Was it in the morning? Let me see. Check something here really quick. So I had to actually baby size on this one, or what I would consider baby size to my trading. I had 400 shares at $1.57 average. So I was actually getting in, I believe, around this area right here. I was building my position, and the goal was, again, I had my average around 157, which is around this area in terms of the price. And I wanted to risk the lows, which was the 130 area. Just that being that it was a significant level in pre-market hours. It had done that low right at open, the low 130s. So I wanted to give it some wiggle room in the high 120s. At one point I had my stop loss at 128 at $1.28. It almost got hit right here. It went to 129, and it was just holding pretty much the whole day. I was holding that position most of the day, and the plan was that if it did work out and it continued to run up, I was going to add more size. So again, I had those 400 shares, which at $1.50 is about $600. And my plan was to ride it at least up into those highs that it had the first day in the 240s, and maybe potentially a breakout. So the play that I had on this was actually a good thesis. It's a good play that I've played before, I've seen before. So this is something that I usually trade when I see a good something that's setting up good, such as this one, why I considered it. Towards the end of the day, I started getting impatient, and I quite honestly, I didn't want to swing this, meaning that I didn't want to take it to tomorrow, like leave my position in there. Although it was a smaller position, I had the potential of losing significantly in terms of the amount of money, because this thing moves a lot with every little tick. So I ended up exiting in the mid 130s. It was like at $1.35, something like that, which explains that $90 loss. It was at $1.34, 33. So I ended up getting around this area, somewhere around this little drop right here. I believe it was right here, right before the market closed, because again, I didn't want to hold it until tomorrow, because who knows what the heck this thing is going to do tomorrow. It can continue to stay in this range and consolidate and continue going up, which in case I'm going to be looking at still, in case that it does do that. Or it could have just gapped down and ate shit, and then I just, ended up losing more money than I would have wanted. So those are the two trades that I took today. Those are trades that I probably would take any day. It fits my patterns. This one is a gap down bounce. I explained that on the first video as well. This is one of my plays where a large cap stock, such as this one, drops significantly in value. This one right here has dropped over 50% of what it was worth just over a week ago. And I try to catch that bounce. So I'm still looking at this one. and then SSPPL, that third day surge where it runs for a day, it consolidates the second day, and the third day it keeps going. Neither of them worked out, at least the way that I was envisioning or playing them for. I don't feel frustrated about my trades. I feel good about my trades. I assessed my risk well, and I executed according to my plans. So that's trading. A red day for the first day of this 17-day challenge, which is cool because it gives you that perspective. And I'm not here, just lying to people and putting random shit that I see other people putting online and on social media, trying to talk about they make money every single day. I'm just being completely honest with you guys and showing you what's up with this stuff. And so for tomorrow, okay, so those were the trades for today. Let's get into what we're looking into November 7th, which is tomorrow. Is that Wednesday? It's Thursday. Oh shit, Wednesday today. So obviously these two are still in watch. I'm still looking to play these if they set up, if they're looking promising. And I'm still looking at the Trump Media Technology stock. For some reason right now my stocks to trade isn't working. So this right here, actually what you're seeing is a trading scanner that I've been using pretty much since I started trading. This is how I find the stocks that I trade. It's something that I wanted to explain as well. Maybe this is something that people see and it's like, what the heck? Like, what is that? Or, where are you finding these stocks? So it's called Stocks to Trade. They have a monthly subscription, which I paid for years. It's not the cheapest. It is an investment. Now I have it locked in for life. I paid a certain amount, and I don't have to pay that monthly with a monthly cost for it because I pretty much locked it in. And I mean, obviously that has saved me and will save me thousands of dollars over the long run because I need this to trade. But okay, so yeah, Stocks to Trade. So I'm still looking at Trump Media stock. Obviously, we saw what happened today or yesterday, last night, late into yesterday. Trump won the election. So this stock of his essentially is still in play. It's still moving along. There's a lot of volume. There's a lot of people playing into the upside and to the downside. Today there was a lot of people shorting this thing, and there's still a lot of people shorting it, probably swinging it overnight. So what we want to do here, I can't even show the full thing, which kind of sucks right now. But so what I want to do right here is just keep observing it, looking at key levels. Obviously that level at $30 is a key level, which is a level that it bounced from a day or two ago. I botched up that trade, which sucks, but there's still a place to be made on this. So this can either, drop really hard and give you like a crazy dip buy, or it can just steadily drop over the next few days and then it has a reversal, or tomorrow it can gap up and continue doing weird shit. Who knows? I'm just gonna watch it because again, Trump just won the election. This right here is still in play. It's something that you want to keep on watch for at least, a few weeks until things die down. Those are really the most significant. Actually, this stock showed up today. FOXO Technologies. This thing went from running in the like cents, 10 cents, 16 cents right here, all the way up to $1. That's obviously a very big move. So this type of play now, either tomorrow it continues to run up, or it just craps out, or it holds the price and it continues a day or two after that. I just want to keep it on watch because it's something that traded a lot of volume. People are watching it. It's on people's scanners. People are either shorting or trying to long this. So I want to be around in case it fits one of my patterns, which if it does, I will be glad to explain it more in detail once it's around, so that way you can have a visual of it. And ideally I would have played it, so that way I can explain what my thought process was behind that. Like usual, I have other stocks are kind of like on the back burner. but these are essentially the main stocks that I'm watching. Again, we had a red day today of essentially $160, something that's not super significant for the account. But again, that's part of the game. I played the plays that I wanted to play, in the sense that I didn't feel like I rushed into anything or I was playing something that was super random. So I feel good with that in a sense. That's something that you develop over time with trading, is being okay with losses, because ultimately it wasn't like a loss if you followed your plan and you were trading something that you knew more times than not, or times that does work out, you're gonna make a lot more than you're gonna lose on it because of your risk reward. So in that sense, I'm satisfied with my trading today, although it was a red day technically, monetary wise or profit wise. So tomorrow I'll give you guys some more content on what happens if I end up trading something, if I don't trade something. I'll kind of just give you a recap of the market, of what I saw that morning, and we'll go from there. But for now, catch you guys on the next episode. Peace.